Hey everyone, welcome to Talking Tokens, a podcast focused on interviewing the best crypto founders, market players, and up-and-coming startups that are changing the industry every single Tuesday and Thursday. I'm Jacquelyn Melinek, your award-nominated host and former senior crypto reporter turned entrepreneur, and I'm excited to be here with you all. Now, let's get into it. Today's guests are Vance Spencer and Michael Anderson, the co-founders of Framework Ventures. The two of them started the firm back in 2019 and have recently celebrated their 5-year anniversary. They have raised hundreds of millions of dollars for their funds, and they have over $1 billion in AUM. They have invested in crypto companies like Chainlink, Aave, and Celestia more recently. I'm excited to have them on and talk about all things crypto. Michael and Vance, welcome to the show.
Thanks for having us.
Glad to be here.
Yeah. So I think I know your background stories. One of you started at Netflix in Japan, right, Vance?
Yeah, it was me.
Yeah. And then Michael, you came from Snapchat?
Yep. I spent a couple years at Dropbox and then a couple years at Snapchat.
Mm-hmm. Yeah. So what brought you two together, first of all, and then into the crypto space?
Yeah. Well, into the crypto space, I think, is a precursor to us living together, which is actually how we first started hanging out. I mined some Bitcoin in my dorm room in 2012. Signed up for an Ethereum or got a Coinbase account in 2013, I think, and in San Francisco during that period of time. Smart contracts were just getting started. Ripple was actually building a smart contract platform called Codius. Ethereum just had a white paper, but they were doing meetups. There's all kinds of stuff going on in the city, and it was really fun. It was kind of a hobby at the time, and never really a professional outlet. And then when I moved to Los Angeles to go work at Snapchat, Vance and I actually became roommates. So we lived together for a number of years before any professional relationship flourished. We've known each other for a very long time.
Okay, so what made two roommates want to start a venture capital firm?
That's a good question. We were kind of both working at these tech jobs, which were, I guess, pretty interesting in some ways. Like we caught like the tail end of the golden age of tech, but what we caught, on the other side of that was like the beginning of crypto. And I have had a Coinbase account since 2012, and Michael similar, and we've always been interested in the tech, but really it only started being investable or even able to build anything on top of it right at the start of 2018, 2019. And we can talk more about it, but we saw no real purpose-built crypto venture funds. We saw a bunch of interesting projects in the DeFi space, which is kind of where we started. And I think our attitude has always just been like, we can kind of do this. We can take the other venture firms that are on the scene, and we can, aggregate all the best deal flow. And I think we've done a pretty good job of that so far, but it was just like an overwhelming interest and kind of a changing of the guard in terms of big tech was getting less interesting and crypto was getting more and more interesting.
And the only thing to add there is we also had a pit stop starting a startup in the space. It was a company called Hashleads, which is basically an NFT platform similar to Top Shot, but going after the NFL as opposed to the NBA. And we actually had a couple of job offers to go and join, venture firms and kind of be like the crypto people covering, that industry. Mm-hmm. And our core thesis was this couldn't just be a coverage area. You had to have a form fit fund that was going after the space, soup to nuts, and it couldn't be something that you just had a couple people focused on. Totally new structure, but all that led into exactly what Vance was describing, which is when we started Framework, actually 5 years and 2 days ago. So it's officially been the 5-year birthday.
Oh my God, happy birthday. We should sing to Framework.
Please no.
Oh my God. That'll be in the follow-up episode when we hit 10 years. We'll do a 10-year birthday episode. But okay, 5 years, 2 days in, what do you think has been like the biggest change? Obviously, there's a lot of growth and evolution of the overall crypto industry since 2019. We've gone through a few market cycles, but on the VC landscape, like how does that look compared to the previous years?
When we started, there was nothing. There was 3 tokens on Coinbase. There was no software to manage, tokens. We had to figure out our own unique self-custody practices. The projects have gone from these scammy ICOs, which were frankly like really, really embarrassing, to, DeFi, which is working. It's spitting off cash flow. You got entrepreneurs building games. You got people building things in AI, and it's kind of become more of like a general purpose software platform, which has certainly expanded the TAM for us to invest in. We've been able to, pull off a couple of funds and distribute and have good returns. And I think like prior to, even last cycle, like there was no track record for any venture firms to speak of. And so kind of now, like we know like where we sit in kind of the league tables of like which venture firms are good versus bad versus, just okay.
Mm-hmm.
And then I think, the biggest change, frankly, is like we've only ever existed in a hostile regulatory environment. Like it scares entrepreneurs. It's scary for fund managers. We can attest to that. And now we're starting to see a pivot where it's like, okay, what if this was legal? You'd have more entrepreneurs coming in, you'd have more funds starting, you'd have more efficient markets. And I think we're kind of at the precipice of this inflection point for crypto. And I think a lot of the things that have been promised, in terms of real world assets or games launching or DeFi working, like those are starting to play out right at the same time. So in many ways, things have not changed. Yeah, like our conviction in crypto has always been very steadfast. But at the same time, like we're just seeing a world where, software ate the world maybe 10 years ago with the A16Z fund launch. Now it seems like crypto is going to eat a fair amount of software, which is going to be pretty interesting.
I completely agree with all that. I'd say that's more of the professionalization of the industry. I'd say the professionalization of the founders that we're starting to see come into the space and have been working with for a long time. 2017, and this is prior to Framework, it was sort of I'd say maybe one of the archetypical founder types was someone who was really in the DeFi or in the Bitcoin ecosystem, really believed in the libertarian aspects of the industry. I think now we're starting to see the overlapping of professional, enterprise-minded and entrepreneurial founders that were just not present in the last 5 years as much as we're seeing right now. And we're starting to see some people come from industry. We're starting to see some people who have come from the DeFi ecosystem from last cycles. But I do think that professionalization of the founders has been a major change as well.
For you guys looking at founders to invest in, you're going to do your due diligence. You've seen like maybe you've kept your thesis the same. You mentioned Vance, but maybe the characterization of people has changed over the years, as you guys both talked about. What is kind of factors today that you care about more that maybe you didn't care about as much in previous cycles?
Well, I think one of the things that you have to just think about when it comes to founders in maybe not even previous cycles, but let's just say like traditional Silicon Valley founders. Traditional Silicon Valley founders maybe look at the pinnacle as being Mark Zuckerberg, where you started in Harvard. Your dorm room. Yeah, exactly. And you built this company, you own whatever, 20%, outside share of ownership in terms of voting. And you're a zillionaire at this point. But you've maintained control and you've like exerted control all along the way. I'd say maybe the pinnacle of someone in the crypto space is Vitalik, where you built this thing when you were 19, same age. And it's been this decentralized protocol. It's launched, it's scaled, it's grown. It's now, highly profitable. It's highly successful. An ETF just launched yesterday. Like that is the pinnacle, but it's a totally different mindset in that you don't have to exert. You're not exerting control. You're actually ceding control. You're turning it over to an open source community. And so I think the first thing is just being able to assess that, being able to say, are you ready to like turn the keys over and hand this over to the community from an open source perspective? And that's, the first litmus test. And then the next ones are really just about conviction in the industry. And we've seen this multiple times where maybe not as much on the founder side, but definitely in the market participant side, where market prices drop and people scatter. And, maybe some founders who weren't bought in shift to AI. And so a lot of the questions that we've asked over the subsequent market cycles in the last 5 years is, where were you last time when it was a bear market? Like, what were you doing? Were you building or were you just kind of doing something else and now crypto's hot again and you want to jump on board? And so I think it's about assessing, do you have the right mindset for 10 years from now when you're ultimately successful? And are you ready for decentralization? And then where were you last time, there was some sort of issue or the market wasn't as favorable? And so we want to assess conviction as well.
With you brought up crypto and AI, and I feel like that's such like a marketing buzzword right now. Everyone wants to like implement AI. Everyone wants to have an AI strategy. And for many, it's not actually going to pan out, right? And I know you guys just co-led a round in Mira Network's seed round. So I'm curious, like, what are your thoughts on the crypto AI segment? What value do you see there? Obviously, you see some value if you invest there. And where do you kind of see it going in the near term?
I think it's helpful to split it into domestic and then international. I mean, anywhere outside of the US and Europe, people are going to monetize their AI startup or project, no matter how big it gets, through a token. These people are not dreaming about going public on the New York Stock Exchange. It just is not a thing. And so for the rest of the world, like, people should be thinking about AI through the lens of crypto, because that is how it's going to be publicly available and publicly tradable. And, the biggest success stories internationally will be tokenized in our view. Domestically, I think what we see is a lot of people, there's a very famous Y Combinator Winter 23 class that got wiped out by OpenAI shipping plugins, and they'd all built plugins. And so kind of like in one fell swoop, all these startups were dead. And so they're like, man, there is actually still a lot of platform risk in this asset or in this, tech vertical. And, maybe if I try something in crypto, it's just a different angle of attack on these incumbents or on these fast growing, startups that are existing within the traditional tech ecosystem. And so like we see ideas from, things like decentralized Hugging Face, where you have a token to bootstrap the data and the models and reward usage. We see ideas like Render, which are, distributed GPU clustering. We're a little bit more bearish on that, just given that you have to compete with the hyperscalers and those costs are hard to match. But I think generally, like, we take the view of, in the long term, AI is probably going to transact on chain. Like, they're not going to issue AI agents discover cards or, ACH verification details. Like, you have to move at the speed of an AI agent, which is a lot of the value prop of the technology to start with. And so a lot of this will happen on chain. And, like, we're totally open with, like, you need to squint to see the future on our crypto and AI investments. We're also doing them at seed level valuations. Like, we're not taking swings at like a $95 billion OpenAI secondary. So it's like much different. And then the last thing I'll say is, like, with DeFi specifically, a lot of these businesses are so mature that, like, you don't need governance anymore. And like, what happens if you turn over the governance of like a Uniswap or a Maker, which is, a swapping protocol and a stablecoin protocol respectively, that are generating a ton of earnings, and just give it to an AI and say, look, like, go profit seek or go goal seek for more profit. That's kind of like the very utopian or dystopian version of the future that, like, AI governing things on chain brings about. And I think that's another category that's exciting. But AI crypto, it's a buzzword for sure, but it doesn't mean it's like any less or more interesting than its traditional counterpart in traditional tech.
Yeah. I mean, I've written a lot of stories about crypto and AI when I was a reporter. And I think it was always like a push and pull between the both sides. Like, one is like, oh, they need us. And the other side is like, they need us, like, neither is willing to say whether or not like one needs more than the other. But I think on your point, Vance, like, there's a lot of opportunity there for AI startups to utilize blockchain technology. And I'm curious if you are investing in like AI-based startups that will utilize blockchain tech, or are they all like blockchain-based that then use AI? Or is it one and the same to you guys?
Are you tired of clunky onboarding processes killing your dApps user growth? Let me introduce you to Passkeys Wallet, enabling one-click Web3 onboarding. Built by Exodus and backed by 9 years of wallet expertise, Passkeys integrates seamlessly into your platform with just a few lines of code and can reduce churn and empower new users to start transacting without leaving your platform. Exodus's developer-friendly toolkit empowers users to create and fund their own wallets directly within your platform. No more drop-off at critical moments, no more seed phrases, extensions, or complicated registration flows. Users simply log in with biometrics for a smooth, secure experience, helping builders retain users and boost engagement. Be among the first to experience the future of crypto. Access passkeys at passkeys.foundation for more.
I would say it's one and the same, frankly. I mean, I think that there are ways that you can leverage blockchains to serve AI needs. And primarily that would be, the facilitation of money, as Vance said. It's like AI agents aren't going to be able to start a Wells Fargo account. They're going to use blockchains to transact. The other one is if you need to be able to prove data provenance, a marketplace that collects all the data, and either it's data that's used for training or data that's used for inference, there needs to be some sort of data provenance mechanism in the marketplace, and a blockchain is purpose-built for that. On the flip side, there are interesting ways that you can have blockchain-based enablement of model proliferation. So maybe decentralized Hugging Face is a good example where maybe nobody actually knows that they're using a blockchain on the back end, but it is something where you are transacting on a blockchain. And so I think it's more levels of abstraction. We're still so early, though, to the earlier points on we don't even know what these user experiences look like for these investments yet. I mean, we don't even have any kind of scaled AI examples in blockchains. And so we don't even really kind of understand like who the end consumer is initially versus next or later on down the road. And so I think as we start to figure that out, that'll be where sort of the disintermediation between what is blockchain versus what is not will come in.
Yeah, no, that makes sense. I know that 2 years ago, you guys launched your third fund at 400 million in 2022, right?
Correct.
And that was focused a lot on Web3 gaming. Do you think you would launch another fund maybe focused on AI or a different sector?
We would get so much shit for that at this point that I don't think we have the gumption to do it.
Come on, give us the AI fund.
I mean, again, these are seed level investments, does not require half the fund. And we invest in probably 5 or 6 distinct verticals within crypto, and then, a few others that are grab bags. And I think we're content to have AI just be one of those 6. No need for, a new evergreen fund.
An AI mega fund, yeah.
Yeah. And also you make plans in crypto and then the market laughs at them. And we launched that, we raised $400 million 3 weeks before Luna blew up. So, what was supposed to be a pure venture fund ended up being mostly liquid. And our LPs, like that we're able to kind of transition from one strategy to the next, but it's all with a venture mindset. If it's liquid venture, if it's private deals, if it's whatever, we're doing each investment with the return with the underwriting to return the fund. So, we're happy to kind of flow from one vertical or one strategy to another. A lot of it is just what the market gives us.
We don't dictate what the market segments are going to be. We just follow where the best founders are.
Yeah.
Yeah. How much of that fund has been deployed?
I mean, a lot of it. Yeah.
A lot of it. That's a good percentage. I guess, are you guys looking to start another fund then?
Our compliance person would kill us if we answered that. So
not a yes, not a no.
every give or take 2 years, we're going to be raising a new fund.
Yeah. I'll put Michael.
Yeah, there you go. I guess in this current market cycle, we brought up earlier how in the early days when you guys launched Framework, there really weren't, VCs dedicated to crypto. You got offered jobs going to work on the crypto segment or whatever. And I remember during that Terra Luna FTX cycle of everything, there were a lot of generalist VCs in the space, right? Like Sequoia, all of them, blah, blah, blah. They were in the space. Do you think they're going to come back this cycle, or they're just nah, we're good on the...
I mean, this is exactly what I was describing, where everybody transitions away the second you have a 20% drop in price. I mean, it is kind of comical. And it goes further to the point, you can't have this be a coverage area with every other tech. I mean, there's basically 3 different types of funds at this point in the venture landscape. Let's say the techs are 100% AI at this point, because that's the only thing that's really investable. And then you've got crypto, because that's a specific discipline. And then you got biotech, because that's a very specific discipline. But other than that, I mean, never the three shall meet. Basically, you can't just have one be the other. I mean, even Andreessen is case in point in this example where they had to separate out their crypto and their biotech from traditional. And so I think it takes a different mindset. It takes a different founder cohort. The liquidity profiles are different. The mechanisms for investing, the mechanisms for returning capital are completely different. It is a completely different market. And I think that's what the traditional VCs saw last time when they ran for the hills. And frankly, like, we welcome them back if they want to. They can participate in rounds, and I just don't think that they're going to be really any value add. But if their money's green, that's fine with us.
I think the other thing is, like, when you have a crypto coverage area within a generalist firm, every time that crypto person brings up an investment, it's like you have to re-underwrite crypto. It's like, are we still believing in crypto? It's like, by the time we've gotten past that, the investment's already been won by some other firm that does believe consistently. And the other thing I'll say is, like, the existing venture firms in the Valley, and we're based in San Francisco, like, they're going through their own kind of like transitional period. Who are the GPs? A lot of the guys are retiring. What are the strategies that are going to work? And they just bet everything on AI. And I hope it works out for them, but like, they don't really have the existential mind space to be like, all right, and then we're going to do crypto again. I think like, like what's our master plan? I think the master plan is something like, you don't see new asset classes every day. And we're going to use this new asset class to leapfrog the existing traditional venture firms in the Valley and supplant them. And I think you can only really do that either if you get lucky with a really hot investment, or if you have this whole new greenfield that you can play on. And it helps when the investment firms, are not playing in that same greenfield. So that's our master plan, I guess.
The only thing to add to that is, and just thinking about this in terms of like traditional venture fund time, there's like, linear time, for instance, where it's days, weeks, months, years. In venture funds, it's like geologic time. You're talking in decades. And it takes multiple fund cycles for LPs to recognize, returns have gone down materially. Because right now in 2024, we're talking about venture funds that were invested in 2014. Right. And some of them even earlier than that. And that's how you're evaluated based off of final performance. And so I think it's going to take a while. But to Vance's point, crypto just moves at a much higher clip because of the liquidity profile of these investments. We're not talking about 12 to 15 years for a seed stage investment to finally get liquid. When you're talking about crypto, it's a token, it's 5 to 7 years. And that's a material difference in terms of IRR that I think is recognized by some smart LPs, but definitely not universally understood.
Mm-hmm. Yeah, no, that definitely makes sense. Given that framework's been around for 5 years, what are some of your investments that you're like, I'm so glad we did that?
Oh man, I mean, there's
a couple shout outs. Yeah.
I mean, Chainlink, Aave, Synthetics, being very long, the majors pretty consistently. Jito is another one. Barachain's another one. Curve, the Graph. I mean, like, what's nice about crypto is that there's much more billion-dollar outcomes. There's also many more $10 billion plus out, like Solana is like, 60, 70, 80 billion. That if you're just looking at that versus the IPOs and like the distribution of our fund returns, it's just like we've had to hit, the right investments at the right time. But we've also had multiple different themes, multiple different successful tokens, and multiple different strategies, frankly, that we could play with. Where like if you're in venture, traditional venture, it's like, man, you're hoping that one company you did 10 years ago has an IPO in 10 years. And like, that's just really tough. And so like, Michael and I joke, like we saw this article about General Catalyst, which is a venture firm buying a hospital. Because that they're gonna like drive returns through this like hospital network. Like what that tells us that just like all the low hanging fruit has been picked. And for us, it's like, look, like there's still a ton of low hanging fruit. There's not a ton of competition. We're not beholden to some regulator to do IPOs. Like we have global token liquidity. And so just the playing field is a lot more favorable, I think, is kind of the major takeaway of like looking at all the data over the past 5 years.
Mm-hmm. I think while you were talking, Vance, I remembered that you guys were not fans of FTX, right? You guys never got involved with it when the whole thing happened. Vance was like, hell yeah, made the right choice there. For paraphrasing sentences. But I guess
passed multiple times.
There you go. I don't want to go down the FTX rabbit hole, but what I want to do is, on the note about the investments that you guys were very happy with, proud with, what were ones that and maybe you guys can't answer this, but what were ones where people, gave you, for a lack of better words, a hard time or shit for it, and you actually came out on top?
Chainlink.
Chainlink is probably the best example of, we just got looks of disgust from other venture firms, and, we weren't investing the right way. And a lot of our investments have had that same flavor. We pioneered investing in the DeFi category. A lot of our early hits were from that cohort. Again, people did not like that. Even Vitalik, he thought that blockchain shouldn't be built for DeFi. They should be built for social apps from the start. But our view is that you have to kind of have the basics, then you can onboard people, then you can get them to use the higher level apps. But I think that's kind of been a defining characteristic of each of our funds, is that people sometimes hate our investments, and we sometimes hate other people's investments, which was kind of what happened with FTX. And we're not on a moral high horse about we called it and we're the best. But there were a lot of people, trying to find a nice way to put this, just riding with SBF. It was it was this whole thing, and you couldn't speak out against them, and if you did, you get excommunicated from deals. And we passed on all the sweetheart deals he offered us, and I think we're pretty proud of that as a result. One of the main things with crypto right now is that, okay, let's say you want to go raise a fund. Are your returns good? All right, cool. Internally, are you solid? I think that's kind of another thing that some firms have trouble with. And then the last one is are you reputationally intact? And if your major investments were any combination of FTX, Luna, BlockFi, Celsius, just LPs just look at you like you're nuts.
Yeah, no, that makes sense for sure. And it's good that you guys stuck to your guns on that for sure. But on the note of Vitalik, I know we've also spoken in the past, maybe not on camera, about Ethereum Killers. And I know you guys have thoughts on that. I find it to be kind of a silly phrase, because I feel some chains don't exist to just go kill Ethereum. Maybe their purpose is to compete. But I think in my mind, the two can coexist. But I'm curious about, given this current market cycle, we're seeing chains like Berachain, Monad, etc. popping up. They're pre-mainnet, but they've raised a ton of money. They're ready to come out. Do you kind of view them like that? Or where do you kind of see these new chains situating themselves?
This podcast is sponsored by Galaxy. If you're immersed in the world of Web3, Galaxy is a name you need to know. As a decentralized super app with an impressive 21 million users boasting over 100 million monthly transactions, Galaxy is elevating its impact with Gravity, the magnet chain for Web3. Gravity is designed for full chain abstraction, zero knowledge proof-based privacy, and rapid transaction speeds, all coming together to offer an unparalleled user experience. Gravity opens the door for developers to effortlessly build on the largest on-chain distribution platform, and for users, it promises an even smoother, more secure journey through Web3. It's not about being on-chain, it's about being on the right chain every single time. Galaxy is on a mission to onboard the world to Web3, and Gravity is the magnetic force that will propel the vision forward. Ready to launch your Web3 journey? Build the future on Gravity. Visit gravity.xyz for more information.
Each one of them has a different flavor. And that's also why I don't subscribe to the ETH killer mentality. Ethereum in and of itself is cannibalizing itself with this L2 roadmap, the ability to separate the different layers, have different use cases. I think that we're also starting to see that roadmap play out versus the monolith perspective. But there is a market for each of these different, ecosystems. And frankly, that I think is maybe a better analogy as to how to think of this in just that it's, basically an operating system. And I think everybody has been conditioned to the whole like Windows versus Mac analogy. And I don't think that that's actually accurate either, because there's going to be so many different, now that we have a business model for creating these ecosystems and a business model for operating within them, there's going to be more incentive to create others that are bigger and better. You don't have to sell computers just to distribute your operating system, which is what it used to be. And so I think we're starting to see a lot of things, whether it's proof of liquidity, whether it's, fast finality, like a lot of these innovations in the core technology of these ecosystems actually come to market, and see which ones are better. And given the fact that they're all open source, you're going to be able to see some of them implement the same stuff over time. And we've seen that, across the board already. And so I think, whether it's Solana, whether it's Ethereum, Berachain, Monad, each of them are going to coexist. I do think that there are novel aspects around this cohort that's coming out. And it really does seem to be that Berachain and Monad are kind of like this cycle's two. And there always seems to be two. I don't know what it is, but it's like Solana and Avalanche, Optimism, Arbitrum. I think now it's Berachain, Monad. And, we obviously have a perspective on Bera just in our investments. But I do think that there's going to be sort of this playing back and forth with each other, and that we'll see live pretty soon here. But it is something where I don't think there's really an effort to kill one or another. It's more coexist in just different angles.
Yeah, I mean, everything used to have to kill Ethereum because Ethereum wasn't that big. Mm-hmm. And now it's like, at least from our investment perspective, people are like, is Solana going to be the ETH killer? Is it going to flip it? And it's like, it's like a 3 or 4x difference in value, like multiple. It's like, okay, it's kind of like interesting, but Sol is at 80 billion, and the last round for Monad was at 3. The last one for Berachain was at 1.5. Like, the bet on Berachain and Monad is kind of like, there's a market for small blockchains that have these philosophical challenges to the other architectures. Like, Berachain is very different than Monad as well. Monad is kind of like more so like fast, cheap for high frequency trading firms, whatever. Berachain is more kind of like, what if we enshrined, the Uniswap, the Maker, the Synthetics, the Aave, all native to the protocol, and had all those fees go to stakers. So they're like different philosophically, but there's a market for small chains. And for us, at least, like, we'd rather take shots at Solana with something like a Berachain than like, bet on like some pair trade of like Solana flipping ETH. And frankly, all can coexist and do well. Like, I think the very, very high level is, they're about to legalize crypto. So like, we're about to get a lot larger universe of opportunity than we've had in the past.
Yeah, but how many chains do we really need?
I think probably, 10, 20 is my guess. And they can be different focus from an architecture perspective. They can be different focus from an application perspective. I think Bitcoin and ETH will probably be like the only like money chains going forward, just given their size. But it's like saying, like, how many tech companies do we need?
It differs during the .com boom versus the bust, and now.
Yeah, there's still a lot of tech companies though. And,
it's, no, I know. Yeah.
The hope is that, we don't have to tell people how many chains we need. They can just value or justify their value on their own. But, make no mistake, like, Ethereum is doing probably, 3 billion of revenue a year at this point. For the first 10 years, it had zero revenue. It just takes time.
Yeah. How do you guys view the zombie chains? Do you see like a way to revitalize them, or is it just like bury them and let's have a funeral and move on?
I mean, I was literally going to say it, like, Polkadot still exists. I don't know if anybody uses it. But I do think that there's an element of, once you lose the momentum, just like any, company, any high growth, in particular tech company, it's really, really hard to lose the momentum regain the momentum once you've lost it. And what happens is, not only is it sort of the developer ecosystem starts to, fade away, it's the people contributing to it fade away. It's, the grant making process fades away. And so I think it's one of those things where, like, L1s and L2s to a certain extent, because you're a platform inherently, you have to maintain that momentum. And it's not something that you have to have, increasing acceleration over time, but you have to maintain that bar, and losing it can only be something that reinvigorates the community. So I think, in the same way that Chainlink launched in August of 2017, then we saw the run up in 2017, massive crash in 2018. It invigorated the community. The same exact thing happened with Solana, where you saw the run up, you saw the crash with FTX, and then it reinvigorated the community. There is an element of you need to have some sort of crash to build the Lindy factor of the community, so long as you can survive that. And so I think it's actually both at the same time, which is you have to maintain the momentum, and then you also have to experience a crash to reset everything, and prove that you are anti-fragile. And I think that that's what, those elements provide, and we've seen it a couple of times so far.
Yeah, it's a good comeback story for sure.
Right.
All right. Compared to Ethereum, do you see momentum or potential for, more opportunity growing across these other chains? Obviously, you've invested in other chains, but in terms of technological growth, innovation, all of this, do you see, I don't want to say flippening because I'm not a big fan of that either. We talked about how Solana, Vance was oh, they're 3-4x away. But do you see an opportunity for any other chain to kind of really hit the momentum and growth that Ethereum has hit?
I think most of the innovation still happens on Ethereum and its L2s. Certainly, there are other monolithic chains like Solana that have kind of their own engineering culture, but that's kind of all at the chain architecture level. I would say the most innovation that we see is from the user acquisition perspective and getting people on chain is from net new chains. Immutable X, it's a gaming focused L2 on Ethereum. It's got about 2 million monthly active users. They're growing, 20-30% year over year. It's we want to bring 100 million people on chain. That's our goal. And we find that, it's not going to be the ETH Foundation that's doing that. It's not going to be the Sol Foundation that's doing that. It's going to be the apps. It's going to be the app chains. And it's kind of irrespective of the chain that they're built on. Things Ton and the Telegram virtual machine, who knows how many of those users are real? It seems like some of them have an interest at using crypto at some point. And so that's another vector. But I think at the end of the day, if you look at, the use of the native assets of the chains, all the L2s on ETH, they're all fighting over ETH to get bridged to their chain to pool with the assets that are originating on their chain. And long term, the composition of a chain's value is both, the fees that it derives, but also the use of that native chain's asset as money. That is the most important thing. And we see, frankly, no competition for ETH on that dimension, on the use of the asset as money. It's the 8th largest staking platform on ETH is the same size as the largest staking platform on Sol. It kind of is a power law distribution in that sense. But I think the overarching point is there's the meme of we are so early, and I think at 50 million monthly active users for crypto, you can legitimately make that argument. We are so early. And then we have two challenges to solve for. It's how do we bring people on chain? How do we get them a wallet that is funded with assets so they can go off and do something? And then once we bring them on chain, how do we make them into crypto people? And I think that is where most of the innovation is happening. Again, it just has such little to do with which chain you're on. And that's why we're such heavy investors in things like games, because we just see that at a certain point, he who controls the users will be the largest chain, or maybe not the largest chain, top 3 or 4. And that's kind of what we're playing for from a venture investment perspective.
Yeah, just to hammer that point, I think last 2 cycles ago was what technology did you have, who is the most technically enabled platform. Last cycle it was who has the most TVL. This cycle our prediction is that it'll be who has the most users, and that will be sort of the new meta game that everyone's playing, because without users nothing's going to work. But I think we're starting to see everybody start to shift their focus towards how many monthly actives, and you got to be able to filter out bots. You have to get to the real usage. There's many ways of doing that, but that I think is where we actually become, real in terms of consumer growth.
Yeah, I definitely see that narrative with the user cycle and everything. I've seen a number of chains doing pretty good on that front. But I wanted to bring up the spot Ethereum ETF. You guys mentioned in the beginning. What impact do you think that will have on the broader Ethereum ecosystem? Do you think this is just good for institutions, or it will actually kind of grow innovation and adoption within the actual on-chain ecosystem?
I think, at least in the first iteration, we're not going to see too much growth and innovation. But what it does, and the process is, okay, in January, we launched the Bitcoin ETFs. They've been, the best performing ETFs at launch in the first, 6 months to date of any ETF. And what I think we're going to start to see with the ETH ETFs is basically the same thing playing out. And our predictions are actually higher than what some of the pundits have said in terms of AUM and kind of volume. We think it's going to be much higher than the 20 to 25%. But we'll start to see that over the next couple of days to weeks. Generally, what this will provide, though, is an entrance for a lot of the people who maybe have been following from the sidelines and just are crypto curious at this point. But in the same way that all of this happens, in the same way that when Vance and I started our Coinbase accounts in 2012, you buy a couple of assets and then you dig in and you become invested mentally as you become invested financially. And I think that will start to drive more activity on chain. I think the other aspect of the ETH ETF in particular, and this has been talked about a little bit, obviously not implemented yet, is the ability to have staking as a function within the ETF. That would be a massive change because you turn a asset-based ETF into a yield plus asset ETF. We'll see if when that happens, but we haven't even touched the surface on the wirehouses, the major RIA platforms. The Bitwise folks talk about this all the time. Is like 90+% of the buying in the Bitcoin ETF to date has been basically our Charles Schwab type accounts, where it's basically individuals who just want to put it into 401ks that they self-manage. Once we start to get into asset allocation from the $20 trillion that's managed by other independent third parties, that's when we can really start to see the shift in AUM. And so we expect that to happen, with Bitcoin and with Ethereum. But I do think we're going to start to see some activity come on chain as these ETFs get more intelligent, not just black holes for liquidity.
Vance, what do you think?
The other interesting thing is that today it looks like the ETH ETFs are going to do more volume than the Bitcoin ETFs. And so there's a real chance that, the ETH ETFs not only get net new inflows from, the Charles Schwab crowd that Michael was talking about, but they also take allocation from the existing Bitcoin ETF AUM. And, it's kind of like the Mag 7 where you allocate a little bit to each. So I think, the prognosis for the ETH ETF, for a lot of people was uncertain going into yesterday. But now I think it's like a resounding success on the order of the Bitcoin ETF and maybe even more than that.
Yeah, for sure. To wrap things up, guys, I have two last questions for you. One, what else are you watching right now that you think people should be paying attention to that we haven't discussed? We've covered a lot of ground here, but within the crypto space, what's something that maybe you're so interested in that you think others should look at?
I'd say it's exploratory. It's not something that's novel, but DePIN and decentralized physical infrastructure, the ability to create markets where there wasn't previously a digital market, I think is really the basic thesis around DePIN. We've made some investments in the space, but areas like electricity and electric grids and virtual power stations are actually a really interesting use case for blockchains. And there are a number of other examples as well. But this is, it's a fledgling industry. It's also something that when you're talking with someone who's not in the crypto space, it's a great example to be like, here's how this could work. And it resonates immediately.
I think I totally agree with Michael. I think the other one is just frankly, like at 100K Bitcoin, and this has been put out there before, but there's more crypto billionaires and centimillionaires than any other industry on the planet. And so I think, number one, people are underestimating just how high crypto will go in a world where, there's ETFs, there's institutional adoption, there's talk of a strategic Bitcoin reserve. But crypto culture will become internet culture just because a lot of wealth will be created from it. And I think there's a good chance that, with the right regulatory framework, you see more entrepreneurs issuing tokens than doing traditional equity. I just don't know why you do traditional equity if you have a chance to do a token. And in FIT21, which is the pending market structure bill, you can raise up to $75 million a year from retail if your blockchain is decentralized. Just don't know why anybody would do tokenized equity if you have a project that can be constructed to fit those guidelines. So crypto eating everything, I think, is the thing that I'm most interested in. Obviously self-serving, but I don't see many people talking about it.
Yeah, no, I love both of those. Last thing, can you leave us with a piece of advice, something you've carried with you throughout your time in this industry?
Stay long.
That's funny. I was going to say bet more.
All right. 2-word answers. I like it. Awesome. Well, Vance, Michael, thank you for coming on today, and happy birthday to Framework.
Thank you. Appreciate it.